Hello and welcome. You're watching Ask PQ on Bloomberg Quint. I am Agam Akil and with me it's Alex Matthew. Hi Alex.
Hey Agam. Well, this is the show that gets you answers to all your equity-related queries, so you can send those queries to us on Twitter, Facebook, YouTube and WhatsApp. You can also call us on 022454044141, or you can mail us, as some of you have already done, on askpq@bloombergquint.com. Only make sure to add the AskPQ hashtag.
We take a look at the markets and we're looking at both the Nifty and the Sensex, declining in trade, and we're putting an end to a 4-day winning streak for now. Both the benchmark indices are trending lower by I would say 1/3%. Not too much to speak for Nifty, holding on to 10,800, however, and the Nifty banking index holding on to 27,500, even though it is declining by a little over 2/3%. Now, when it comes to your broader markets, and of course that's the Nifty contribution list, essentially what's bearing down on the indices is the financials along with Reliance Industries. But your broader market indices, such as your mid cap and the small cap indices, are actually advancing in trade, and this has been a reversal of trends as to what we saw yesterday. In terms of gainers and losers, well, as I've already mentioned, to a certain extent, NTPC standing out, advancing by 2%, followed by Tata Motors and UPL. And on the losing end, we do have some weakness in OMCs, HPCL right at the top, down 3%. IndusInd Bank now looking weaker, and Axis Bank also looking at some amount of profit taking. But Alex, a day of consolidation continues, and we're going to have to keep an eye on those crucial levels, especially the Nifty at 10,800.
Absolutely. Well, I want to start, of course, by introducing our experts, Agam, but there's a very interesting question to start with. Let me get our experts in for the day first. Brijesh Singh of StockAxis and Sandeep Jain of Tradeswift Broking are here to answer all of your questions. Welcome to the show, gentlemen. Sandeep, I want to start with you because I was reading one of the mail queries. Krunal has sent us a query on mail. While most experts talk about overexposure to a particular company or sector, and advise against it, of course. We've got Krunal, who's holding shares of all the HDFC group companies in his core portfolio with a minimum of 10 years time horizon, and he's wondering whether this is the way to go, considering that a lot of people do advise HDFC as one of the stocks that you should hold for the long term. What do you think he should do?
See, certainly he can hold on to the stock. There is no problem about the group as such, and as we know that it is one of the best managed groups in not only in India, in Asia and in the world also, and they have actually generated good amount of returns for the investors. So be it HDFC Bank or be it HDFC or even HDFC AMC for that matter, and HDFC Standard Life. So all these four companies, somehow I feel that they should be there in the portfolio. But then yes, he's right, if one particular group is being exposed so much, then he should be worried also a bit. So I feel that HDFC Bank and HDFC Limited, somehow I'm very confident on these two stocks, and he can certainly hold on to these stocks. And if he really has to take an exposure in insurance, he can look at SBI Life and ICICI Pru for that matter. And if he wants to take an exposure in AMC space, then Reliance Nippon AMC has actually corrected a lot. So for the short term, he can certainly have some exposure in that also. I think that he can make some faster money if the market revives faster and if things get better for these AMCs. So Reliance Nippon AMC looks very attractive at these corrected levels.
Okay, well, I'm going to take up a query which we had yesterday. Unfortunately, because we had run out of time, we could not take one. We have a question from Sapna Samal. Her question is on Chennai Petro, and she's bought at 285. The question she wants to know is the risk reward favorable to add more at these levels? It's currently trading at 266. Brijesh, good afternoon. How would you help Sapna with her query on Chennai Petro?
Good afternoon, Agam. See, on a daily chart, the stock right now has been trading in the higher lows formation. But the only concern is that if we draw a trend line on a daily chart, taking the previous swing lows, the stock is nearby that trading line. If anyhow, if that thing breaks and it moves down, then we can see a panic selling. The selling can go all the way to the level of say 250 or followed by 220 zone. So at this juncture of accumulation, I would not be suggesting. If she wants, then somewhere around 250 below, she can look for an accumulation purpose, but keep a strict stop loss of 220. Whereas on the higher side, it's been concerned till stock doesn't give closing basis above 280. The stock might be, trade in the range of say 280 on a higher side, followed by 266. But what I'm looking that there are chances that the stock might once drift below 260 at the present rate and might try to touch a level of 250. So keep a stop loss of 220. Anything somewhere around 250 one can use for an accumulation purpose. Anything closing above 280, stock has a chance of going all the way to 305 zone.
Okay, well, let's take the first question on YouTube. We've got Mayank, who's been asking about Maharashtra scooter for some time. I must admit, we've taken it in the past, but he points out that it is at a 52-week high today. It's up about 7.5% on high volumes, and it has been, if you pull up the longer-term chart, from October or 22nd of October, if I'm not mistaken, onwards, it has been on a bit of a tear. Brijesh, would you come in on this and just tell Mayank at this point, should he book out profits or should he hold on?
See, Alec, unfortunately, I don't track this counter, so would not be able to comment on it.
Okay, let me get Sandeep in. Sandeep, Maharashtra scooter viewed by many as a proxy play for the Bajaj Group companies. How would you rate this company as one to hold in your portfolio for the long term?
Yeah, certainly one can hold on to the stock. It's typically a good fundamental stock, and the best part about it is that it is running at 0.46 to its book value, and as you said, it's a proxy to the Bajaj Group holdings. So it's a holding company for these companies. So I think it's a fantastic stock to hold. In fact, it's closer to its 52-week highs only, and still I feel there is some more rooms left for some more appreciation. So I think it can easily go up to 4,000 levels. So one has to hold on to the stock.
All right. I hope that helps Mayank with his query on Maharashtra scooters. But I'm going to move on and take a query from WhatsApp. Vaishali has written, and she wants to know about an L&T Finance 165 call. Now, she hasn't mentioned at what rate she's bought it at, but it's 165. It's currently at, the underlying is currently trading at about 144, which means, rough estimates are about 10 to 13% upside from current market levels. The premium, of course, is very low. But, the question really is, what is the likelihood of L&T Finance holding, advancing by as much as 10% from current market levels? That perhaps could be an important question that we can pose to Brijesh. Brijesh, firstly, your view on L&T Finance holdings, how are you seeing that? And what would you recommend Vaishali to do if she's taken a position in the 165 call?
See, first of all, looking on the cash chart, the stock had already made a low of 120, and after that it has moved up. On a daily time frame, the chart has been making a higher lows formation. Somewhere around 159, 160 zone, the 200 simple moving average lies. So 160, where she has bought these the call option, and right now the stock has been trading 140 zone. Even the time value would be playing up, because I'm not looking stock going below the level of say 155, 156 zone. And whereas on the downside is been concerned, anything if it give closing below 140, then the stock can come to the level of 132. So 155, 156 would be the higher zone as a resistance, whereas 140 would be the immediate support. If that thing breaks, then 132 would be coming in the play. So if she is holding, then keep a strict stop loss of 140 and hold on. But as I said, 155, 156 would be the tough resistance. So I'm not looking stock going beyond this level in a Jain series. So keep a stop loss of 140, and if she wants, you can hold on.
There's also this matter of time decay. My question is, would you also recommend keeping a time stop loss here?
See, as we check it out on a daily time frame as well as on the hourly chart also, the stock is not moving that much high. So that's what I said, because it's a slow moving counter. Already the rally from a 140, 129 odd level to the level of 159, the stock has already moved up with the increase in volume, and after that it has been corrected. Now the correction is taking time. It's been going on the consolidation phase. So I'm not looking stock going again to the level of 155, 156 in this Jain series. Whereas on the downside, I'm looking stock breaking 140 or also. So that's the reason I have said that keep a stop loss of 140 with a strict stop loss and hold on. But as I said, 155, 156 would be acting as a tough resistance. So if she wants, then better to look out for buying 150 or say 155 call rather than going for 160 call.
Okay, we've got a stock on which we haven't really had a conversation on yet. Harshvardhan on Facebook is asking about IGSec, which is listed as ISCHEC Heavy Engineering. Let's pull up the chart and see where it's currently trading. From what I can see, it's just about that 5,000 mark. If you are not familiar with this counter, it is, or rather the company, it manufactures industrial equipment, and it essentially manufactures goods like pressure vessels, heat exchangers, presses, boilers, iron and steel castings, etc. But Sandeep, if you want to come on, if not this particular counter, but the space that it plays in, from my understanding, it's a very competitive space. The margins are wafer thin. Would you recommend getting into this counter for the next 3 years or so? It's seen significant correction over the last 1 year or so.
Somehow I like this company. In fact, see, fundamentals wise and the opportunity wise also, the company looks good. And this particular space somehow could not perform that well. But then, when it comes to this space, somehow in engineering and capital goods, somehow we have been recommending, say it's L&T or Siemens or even Cummins Industries. So one can look at these three options rather than, the smaller and mid caps, because somehow small caps and mid caps could not perform in these last 1.5 years, and it might take time also because it's an election year also. So one has to be a little bit cautious about picking up small caps and mid caps here.
Okay, well, we have one more futures query. We have Sabirishwaran, who wants to know about ITC futures, considering the non-food business. Of course, that's on a fundamental basis, but up to what level can its stock value go by the end of 2019? That's the query coming in. Of course, I'd like to mention that futures, of course, will, considering they are for January futures, it will have to be rolled over from one series to another. The other question and the other thing that I'd like to point out is that by the end of the year, you will also see physical settlement for ITC. Of course, ITC, the physical settlement will come in into play in October because of its relatively higher market capitalization. But that said, Brijesh, I think let's keep this simple. Let's take a one-year view of ITC. What are you expecting here?
See, Agam, from somewhere around 332, the stock got corrected to the level of 260, and after that it has been moving in a range of 260, 265 on the downside, followed by 295 to 300 zone on the higher side. The best part is that the oscillators are, whereas on a weekly time frame, they are making the higher lows formation, which is giving a bullish sign. So I am looking stock should not break the 260 odd level. Anyhow, if that thing break, then 240, 245 band would be playing as a strict support level. So one can keep that thing as a stop loss. Whereas on the higher side has been concerned, 305, 310 are the immediate resistance for this Jain series, which I'm looking for. If anyhow 310 we get a closing basis, then stock can move up to the level of 325. Whereas on the cash segment has been concerned, I'm looking stock at least going to the level of 355 to 360 zone in a 1.5 year time frame has been concerned.
Okay, let's, well, that's a view on IDC. Let's take a view on, well, Prasad's query. Prasad's asking about Divi's Lab for the long term, whether, Sandeep, would you pick this stock among its mid-cap peers, or would you pick another one from this sector?
Somehow I like Divi's Lab, and I feel that, this stock can still do well, and it has been one of the outperformers in the sector. But somehow, Divi's Lab is one stock, Biocon can be the second stock, and Ipca Labs. Somehow I really like that stock, and above all, Aurobindo Pharma. So generally, pharma space, I was of a contrarian view, and it actually performed well also. But now somehow it is going with the markets. But in the longer run, I think for defensive bets, pharma can also be a good bet. So one has to have an horizon of at least 1 to 2 years to have these stocks. So Divi's is a good pick, and Ipca and Aurobindo. Somehow I like these picks in this space.
Okay, well, we move on to the next query, and it's from Ujjwal Kumar. He's one of the regulars. Ujjwal, you have queries on two. One is Federal Bank and the other one is Reliance Industries. He wants a short-term view with a target and a stop loss. Ujjwal, I'm just going to take up one query, considering we have a whole host of other viewers also waiting in line. I will take up Federal Bank, but I can also suggest that you take a look at our Bloomberg Edge copy on Reliance Industries, because we have done a fair bit of comprehensive technical analysis on this from our in-house expert. So you can take a look at Reliance Industries, a Bloomberg Edge. But for Federal Bank, I'm going to go across to Brijesh and take his view. Brijesh, how are you seeing short-term movements in Federal Bank, and what would you recommend as stop loss and target?
See, Agam, no doubt the stock on a daily chart after breaking this previous swing high of 85, stock had moved up consistently. If he's looking for a very short term, say a month or say a couple of month time frame, then the stock has a nice support somewhere around 88 to 90 zone, which should not be get broken. So keeping a stop loss of 89, any dip below somewhere around 95, one can use for an accumulation purpose. Whereas 99 to 100 rupees would be acting as a resistance. But if we extend the time frame, then the targets are 125 followed by 145. So this 145 I'm looking for a 1 year time frame plus. If he's looking for a say a 4 month to a 6 month time frame, then the target are 125, but your stop loss would be a little bit deeper, somewhere around 80, and any dip somewhere around 90 or to 92 one can use for an accumulation purpose.
Okay, let's get in Vivek Kanojia's question on YouTube. He's asking about at least one counter that's seen significant pressure. Ashok Leyland, he's bought at levels of 106. He's asking if he can add at the levels that the stock is currently at. Let's pull up the chart, 95 or thereabouts. It's been under pressure, remember, ever since it broke that 100 mark. Sandeep, on the fundamentals, would you wait a little bit more? A lot of people are talking about more pressure to come on this counter in the short term.
Yeah, I think he can hold on to the stock. Somehow he shouldn't worry about the quality of the company, the fundamentals, and the quality of the management. There was a correction because of the existing MD was about to resign, and so all those negative news were there. But then again, there was a good positive news also, that it got a good order from a particular state government. I feel that at 85 to 90 levels, he can even average the stock, and I'm very bullish in the long run on this particular company, on this particular counter. And the auto sector was going through a bad phase in last quarter, so I think that's why all these stocks have actually corrected. So he should wait and hold, and rather try to look for some opportunities to average at around 85-90 levels.
Alex, I was reading Vinod Dasari's comments, and he did an interview very recently with one of the other news outlets, and he was surprisingly positive on the volumes, and this is despite the fact that we've seen so much weakness in December. There's a little bit of contradiction going on. Of course, today we've also had the news that it scored another big order of around 2,800 odd buses from 3 transport undertakings. So some very mixed cues coming in from Ashok Leyland, certainly. But with that, I'm going to move on to the next query, and this one is on Tata Steel. We have GS Reddy on YouTube. He's bought the Tata Steel call, 500 call, and paid a premium of 8. And his question is, what can he do with this specific call, considering his time horizon is about 2 weeks. So that's Tata Steel. It's currently at 481. It's not too far away from going in the money. That is moving above the mark of 500 right now. But Brijesh, I'll leave this one up to you. This particular call has been bought at 8. Its premium is currently at around 8.5. So he's looking at a little bit of a profit right now. What would you suggest he should do?
Yeah, Agam, I would be saying to hold on. 470 band is a support. So till that thing doesn't break, I'll say them to hold on. Keep a stop loss of 470. Whereas on the higher side, 505 is a resistance zone, but chances are that once it would be trying to touch 515 also. Right now, even I'm looking the stock on a 500 call. It's been trading somewhere around 850 or say 855. So hold on. Chances are that stock might try to touch a level of 500 so that he can book his profit in it. The stop loss of 470 on a cash segment.
Okay, Sandeep, why don't you come in on a couple of the auto companies as well, because like Agam mentioned, there's a little bit of uncertainty going into the end of the financial year about how these auto companies are going to fare. Would you really stay away from the sector and wait till you get some more clarity on the numbers? Because clearly the commentary that's coming in from some of these managements is contrary to what really the buzz is on the street.
No, I won't stay away from the sector. Somehow I feel that this sector will do well in the coming quarters and coming months, because see, last 2-3 months were actually going through a rough patch because of the crude oil also going higher, making new highs, and then there was the third party insurance cost going up. So all those factors were there, but now since the raw material cost might come down because the steel and the base metals are actually coming down, so this will be positive for them. Crude actually stabilizing at lower levels. So this is positive again. And then, it's the election year also. And I think lots of soaps and incentives will be doled out by the government also. And people might spend on, these two-wheelers and four-wheelers. So I feel that, one should not worry about the particular auto sector. And because of the auto sector demand, the auto ancillary sector was also not doing well. So I am actually very bullish on the auto ancillary sector because of the valuations they are running at. So there were a couple of stocks which I have been recommending on your channel, and I feel that Munjal Auto, Munjal Showa, these are good bets. Then one can look at Jamna Auto also, one can look at Rico Auto. There are many numbers, but then one has to wait and watch, and wait and hold and have some patience. It will certainly give good returns in 6 to 9 months time frame.
Okay, Sandeep, we have one more for you, and this is from the life insurance space. We have a gentleman who says that he's bought HDFC Standard Life at 501. The question, of course, is on Facebook. Pardon me. Yes, 501. That is the entry price. His question is, now is it a good time for him to buy into this particular stock at these levels? From what I understand, it's still at heady valuations, currently trading around the mark of 400. Would you recommend buying more and adding more at these levels?
See, he can hold on to the stock. Somehow I feel that, ICICI Pru is running cheaper, and in fact it has corrected also a lot. And now from the bottom levels of around 320, it has actually gone up to say 5-10% also. So I feel that, HDFC Life, SBI Life and ICICI Pru, all these three are good companies. And in fact, ICICI Pru and SBI Life are trading cheaper than HDFC, as for obvious reasons, HDFC is always given a premium in the financial sector. So I think he should hold on to the stock in HDFC Life, and if he has to average, he can average with SBI Life.
Okay. Sandeep, why don't you come in on IndusInd Bank? The results obviously came in yesterday, and the broad consensus seems to be that it met the third quarter profit estimates despite making provisions for exposure to IL&FS Group. You've studied the numbers, I would think. What's your view here? Would you recommend a fresh entry into the counter?
Somehow, I won't recommend the fresh entry in this counter. Reason being, lots of all these positives are already discounted, and in fact, quarter on quarter, year on year, this company has been an outperformer and they have been giving good results. And that IL&FS provisioning has also been done, but still the company did well in terms of delivering good numbers, and that's why the stock went up. Also, again, it has corrected today. But from longer term of view, I think I'm not very positive and not very bullish on this counter because of the valuations. I think ICICI Bank, SBI, BOB, Axis Bank, these four banks I find cheaper than these private sector cousins like HDFC, Kotak or IndusInd Bank. So I think one should look for the four names I have mentioned. But ICICI Bank and SBI actually has gone up very fast in last 2-3 sessions. So one should wait and watch and try to grab at lower levels. But BOB looks very attractive to me because of the favorable ratio also. So I think one can hold on to BOB and rather try to buy at lower levels also and start accumulating in a staggered manner at even the current levels.
Okay, well, it's time to hear the rapid fire segment. And on that note, I'd like to, request our experts to keep their answers as short as possible. Even a sentence in an answer would do. The query comes in from Anjani Dubey. Her question is on Allahabad Bank futures. She's entered into the futures at 47 rupees per share. Her question is, should she sell or hold? It's currently at 45.8. That's where its underlying is. Brijesh, this one is for you. What should she do?
Keep a stop loss of 44.5 and hold on. At least your cost price would be coming up so that you can book your stock as such.
Okay, Sandeep, quick view on Rain Industries. Would you recommend a fresh entry? This is Anirudh Gupta.
No, I won't recommend a fresh entry in the stock.
Sandeep, one more for you. A quick view on Schaeffler India. Do you track this?
Yeah, I do track this stock and I like this stock. And in fact, I was talking about the auto ancillary sector. I really like this company. It was previously FAG Bearings and I think it's a great company to hold. Yeah.
Okay, very quickly, would you recommend holding CDSL for the long term? Bought at 295?
I really love this stock. And in fact, I'm really surprised why this stock is not doing well. And I really see great prospects for this company in the coming future. So one can really accumulate this stock at these levels.
Okay, Brijesh, a view on Axis Bank. Jay Seelan wants to know, Axis Bank bought at 665. What would you recommend?
See, right now it has been quoting at 657. I'll say till stock doesn't break 640, 642 zone, keep that thing as a stop loss and hold on. Whereas on the higher side it's been concerned, I'm looking stock touching at least 680 to 684 zone.
Brijesh, another one for you. This is Jet Airways. We've got Soumya Ranjan Nayak who's shorted the stock at 243. He's asking what his target should be.
Keep a stop loss of 248, hold on. Whereas on the downside, I'm looking stock, once it breaks a level of 238, stock can touch level of 230 also.
Okay, Brijesh, one more for you. Bajaj Finance. The viewer Chandrasekhar wants a 3-month view here, a target and a stop loss if can be provided.
See, right now it has been quoting at 25.21. If he has not invested, then I'll suggest him, if it trades somewhere around 23.5, then one can look out to buy this counter with a strict stop loss of 2100. Whereas on the higher side, stock has a multiple resistance at 2600 followed by 2650. So this band would be a tough resistance. If that thing has been crossed, then the stock can jump to the level of 2900 also. But the time frame increase the time frame on a higher side little bit.
Absolutely. Well, thank you so much, gentlemen, both Sandeep and Brijesh, for helping our viewers with all the questions today. That's all the time that we have. In fact, some of the questions that were not answered, we'll try and take tomorrow. That's all we have on this edition of Ask PQ. Do remember, we're also present on the website bloombergquint.com, so check it out. Up next is Power Lunch, so do stay tuned. This is Bloomberg Quint.